Well, fresh data from FactSet shows corporate profits are holding steady. The chart here that we're going to show you shows net profit margins for S&P 500 companies are coming in above their 5-year average for the 6th consecutive quarter, and analysts expect the trend to continue into next year. Joining us now, Michael Reinking, NYSE Senior Market Strategist. Now, Michael, thank you for being here. There's a lot of macro headline stuff going on. So I wanted to start with and bring it back to earnings, and then maybe we'll get to the headline stuff.
Sounds good.
And that is profit margins are okay, which is perhaps surprising given all the noise.
Yes, yeah, and look, I mean, overall, right, the earnings season thus far has been very solid, right? We've seen, the financials kind of came out of the gate, pretty strong numbers, particularly at the money center banks, kind of helped by trading and kind of the investment banking, right? And now we're starting to see kind of the earnings start to broaden out. Last week we started to hear from some of the industrials, and with a lot of those companies, pointing to that solid AI, infrastructure demand, kind of really driving those numbers, right? The regional banks weren't quite as strong. We had that brief, very, very brief kind of credit scare, there a couple weeks ago, and then this week we really kind of get into the meat of, kind of the tech earnings, kind of in kind of the middle of this week, and that's going to really be kind of probably the biggest driver of the market this week.
And do you think it's going to be a positive driver?
Right. So I mean that's really like the question I think about all of these catalysts that we have this week. That we have high expectations, right? We've now reshifted the expectations for kind of China, right? We have high expectations for the Federal Reserve to cut rates. There's also very high expectations for those tech earnings, right? And so what we've seen is a lot of kind of deal announcements and it's hard to keep kind of feeding that the AI hype, right? And we're going to see solid numbers. It's just a question of kind of how markets respond to that on the back end. I can't imagine that we're going to hear anybody really suggest that we're slowing down in some of that CapEx spending this quarter, right? It's just, we're just hearing everybody kind of ramp that up, right? So I don't think we're going to hear that sort of inflection point from here. Now, what we've seen kind of within the market, right, is we've seen, very interesting reactions. So if you look back last week to GE Vernova or Vertiv, right, they had very, very solid earnings. Stocks gapped up, kind of sold off pretty sharply during the session. But if you look over a 2 or 3 day window, they kind of ended up right back where they were, right? So there was a lot of volatility. I do think, options positioning is driving a lot of that, kind of at a single stock level and, kind of at the index level, right? And but we'll have to see kind of how markets, take this week's news.
Yeah, we will. And in the meantime, before we get to all of those earnings, we have headlines out of Asia, right? That Treasury Secretary Bessent is confident that they have a framework of a potential deal. It still sounds pretty provisional, but that's enough for markets.
Right. Yeah. And I think, from a market perspective, right? So now you've shifted the expectations a little bit higher. We'll see if we get, kind of the removal of the fentanyl tariffs or what we actually get, soybeans, soybean purchases and things of that nature. But I think the removal of that overhang, right, or pushing out that overhang, right, allows markets to continue to operate, kind of as, on the kind of the status quo, which is at this point, kind of continuing to move higher, right? So we saw, as there was that little bit of a scare on 1010, right, we saw that massive reversal, kind of within the market. You had that 3% drawdown, the biggest drawdown we'd seen since the last time we talked about, kind of trade wars right back in April, right? But we've now kind of, worked that off, that reset some of the positioning, kind of within the market as you had a scramble for, for protection, right? And then that's, very quickly unwound, and now we're kind of pushing to fresh highs.
And so basically it allows people to just focus on the earnings and the other stuff rather than having to worry about the trade headlines.
Yeah. And those numbers, right, as we just talked about, have been, kind of very solid, and you're looking at kind of the expectation that you have, kind of strong earnings growth as we head into next year, double-digit earnings growth again. Hopefully we start to see kind of some of the investment that is being put, kind of into the U.S. economy start to flow through, to corporate earnings, to kind of the economic data.
The Federal Reserve is the other thing that's having this week, an interest rate cut expected. How, when you talk to people on the street, how are you all operating without the government data right now, except for CPI?
Right.
It seems like that's the last we're going to get for a while.
Yeah, and there's a lot of different private data that's out there, right? In terms of kind of what the central bank is kind of using, and what the street is kind of using to kind of see kind of where the economy is moving. And then if you listen to kind of the conference calls, right, and corporate commentary, right, they're continuing to tell you that the environment is very much the same as it has been. right, where there's some caution. There's some caution on the hiring front, but we're not seeing kind of mass layoffs, right? In terms of kind of the labor market, and they continue to tell you that the consumer, we have a kind of a K-shaped kind of recovery, but the consumer, particularly at the higher end, is holding up well. The lower end consumer, the lower income consumer, right, is struggling with kind of the cumulative impacts of inflation. But in general, right, we're seeing kind of the economy hold up pretty well.
So what does that mean then? I mean, is the Fed really a catalyst for markets this week? How are you kind of treating it?
Right, so I think the 25 basis points is pretty much baked in. There's some possibility that we do hear kind of the end of QT, right? I think the expectations for that have started to ramp up. You've seen multiple kind of major investment banks kind of call for that to happen at this meeting, if not the next. Fed Chair Powell tends to like to, as Jennifer kind of mentioned, kind of maintain their optionality, right? So I don't think he's going to necessarily fully bless a kind of December rate cut. But I mean, I think markets are telling you that that's coming, right? And as you kind of got the CPI data last week, where we didn't get that big upside surprise, right? We started to see shelter finally start to kind of be that kind of the offsetting force to some of the inflationary categories. That allows the Federal Reserve to continue to move forward, and you're now seeing markets start to price in a third cut, just slightly better than a coin flip in January, right? So you're seeing kind of expectations continue to just move a little bit higher.
Interesting. We'll see what happens after this week. Thanks so much, Mike.
Thanks for having me.